Okay, hello, everyone. When you see this, it will probably be Wednesday for my YouTube and all my other social media platforms. But if you are listening today, happy Monday. It is December 11th when I'm recording. But when you hear it's gonna be December 13th, every Wednesday. In that case. Today is a awesome day for me. So, even though it was a little bit hectic this morning, other than that, everything was good today. I'm so very grateful and thankful that I had a great day today. All right, so for those who do not know me, my name is Ramira, aka Mira the Goddess 22. A little bit about myself, 29 years old, stay-at-home mom to three wonderful boys, and I rob banks legally, and I'm here to teach you how. So if this is your first time, I just want to say welcome. This is where we're going over how we can make money through the foreign exchange markets. And the first thing that I do, or how I teach, is we go over the Candlestick Bible. This is the Holy Grail. You can be able to get the Candlestick Bible on any of your internet browsers for free. Or if you would like to purchase it, I have an Amazon link to give to you. Also, baby boy is in the room with me while I record, and he is up. So if you hear him, hey, he doing his thing. Also, if you hear any music in the background or anything, I do not have rights to that. All right. So when I first started out this training journey, I actually downloaded this book. I printed out the pages, put it in a folder, highlighted, learned it until it actually helped me. So I'm here to just share this free information. So how you could be able to get started. And then those who have been rocking with me, welcome back again as well. All right, so um, if this is your first time watching me, I would say stop watching this video and go to my previous videos as well. Because I want you guys to be able to get to where we are without having to be confused. One second, guys. All right. So if this is your first time watching, please go over the introduction of the candlesticks, what it means, how you could be able to trade it, overview history of the candlesticks. We just finished out last week. We have already went through the candlestick patterns. So before you even watch this video, it is necessary and imperative to be able to read and do your homework with the candlesticks so you can know on what to do up until this time being. All right. So, and it gives you the psychology behind them. So please watch it so you can know what's going on. All right. This is the good stuff. I'm so excited to talk about this. We are talking about market structure today. Of course, we're going to go through the exercise, the candlestick pattern exercise. We're going to talk about the market structure, and depending on how much time we have, how to trade trending markets. Okay. All right, so let's get into it. Let's actually go to the exercise. So I hope you guys been doing your homework because I'm going to give you some time to actually answer these questions in your own. Yeah, so give you about 1 minute or so to get a good guess. Okay, I gave you guys some time. I hope you were able to like write down your answers or see if you can get the answers. So let's go through them. Well, let's see what I got. I got a bullish harami. I got tweezer bottoms. When it's bottoms, it goes up, right? I got a bullish engulfing, bullish engulfing. It's kind of looks like a bullish engulfing. It still engulfed the previous candle. It's just like market just shot down some and then she came and closed. And then I got a bearish around me. So I just ignore everything what he said. But it says, now I think that you get some information about Japanese candlesticks. You know the anatomy of each candlestick and the psychology behind its formation. Let's take this exercise to test your knowledge and see if you still remember all of the candlesticks we talked about. Look at the chart below and try to find the name of each candlestick number and the psychology behind its formation. Of course, all of this is bullish. This is the only one that is bearish. All right, so it says if you can easily identify these candlestick patterns and you understand why they form, you are on the right path. But if you struggle to identify these patterns, you will have to start learning about them again till you feel like you mastered them. And there's nothing wrong with going over this book. Each time I read this book with you guys, this is another refresher for me. So I don't care how many, like when you read the book, just you read in the book. Continue to read. You always learning at different phases of the day. Oh my gosh, I forgot my motivational for today. 1 second. It says, keep your dreams alive. Understand to achieve anything requires faith and belief in yourself. Your vision, your hard work, determination, and dedication. Remember, all things are possible for those who believe. By Gail Devers. That's, I like that. All right, so sorry, you got the motivation in there. I'll type it out. All right, so it says, let's try to answer the questions concerning the candlestick patterns. Screenshot on the charts above. So the first one is a bullish harami. Okay, inside. Yep. This formation of the candlestick pattern indicates indecision in the market. In other words, the market was consolidating during this session. All right. Two is the bullish tweezers. So what is that? The tweezer bottoms? Yes. Yes. So tweezer bottoms or bullish tweezers. The market was trading up. Sellers tried to push the market lower, but the reaction of buyers were more powerful. He has a sucker. Um, this pattern represents the battle between sellers and buyers to take control of the market. All right. 3, 4, 5, and 6 are all in golfing bars. 3, 4, 5, 6. All right, so sellers were engulfed by buyers. This indicates that buyers are still willing to push the market higher. Boom, and what it did, push the market higher. All right, it says the Harami pattern. This pattern shows us that the market enters a consolidation phase. During this session, buyers and sellers are in the indecision period. And no one knows who is going to be in control of the market. All right, indecision. Let's take another exercise. Look at the chart below. We'll try to figure out these candlestick patterns. I'm gonna pause or just pause, speed up an extra 2 minutes, whatever, after you pause, whatever. I'm gonna give you a couple seconds. Let's do it. Uh-oh. All right, so we are back. All right, so let's see what the answers. I kind of gave y'all the answers. All right, so we got the bullish engulfing. We have the hammer, this hammer, which is the large body plus the smaller body, baby harami. So it is a hammer. Oh wait, this is the hammer and a small body. That's a harami. I didn't really think this could be a harami, but I guess it's a harami. If this is it's a harami, then it's a harami. Well, I thought a harami. Well, it's inside of the. It's inside. I see what it means. It didn't close above, or it didn't close below it. It's in the inside. All right. Okay. All right. Harami pattern. And then they got a bullish engulfing. And I'm gonna tell y'all my answer. Sorry. Please, I want you to open your charts and do this homework over and over again. You will see that with screen time and practice, you will be able to look at your charts and understand what the candlestick tell you about the market. Don't worry about how to enter and exit the market for the moment. Take your time and try to master the candlestick pattern discussed in the previous chapters. In the next chapters, I will arm you with techniques that will help you identify the best entry and exit points based on candlestick patterns in combination with technical analysis. All right, trust me, these price action strategies will turn you from a beginner trader who struggles to make money in the markets into a profitable price action trader. All right. So market structure. All right. So market structure is one of the most important skills that you would need as a trader. Is the ability to read the market structure. It is critical. It is a critical skill that will allow you to use the right price action strategies in the right market condition. You are not going to trade all the markets the same way. You need to study how the market moves and how traders behave in the market. A market structure is the study of the market behavior. And if you can master this skill, when you open your chart, you will be able to answer these important questions. What the crowds are doing. Who's in control of the market? Who's in control of the market? Buyers or sellers? What is the right time and place to enter or to exit the market, and when you need to stay away? Through your price action analysis, you will experience three types of markets: trending markets, ranging markets, and choppy markets. In this chapter, you will learn how to identify every market and how to trade it. All right, so number one, we have trending markets. All right, trending markets are simply characterized by a repeating pattern of higher highs and higher lows, and an uptrending market, and lower high and lower low, and a downtrend market. See the example below. All right, so this is an example of an uptrend: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, another higher high. As you can see in the example above, the market is making a series of higher highs and higher lows, which indicates that the market is uptrending. You don't need indicators to decide it is bullish or bearish. Just a visual observation of price action is quite enough to get an idea about the market trend. Look, another example of a downtrend. All right, lower high, lower low, lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. An example above shows a bearish market. As you can see, there are series of higher lows and lower lows, which indicates an obvious downtrend. Trending markets are easy to identify. Don't try to complicate your analysis. Use your brain and see what the market is doing. If it is doing series of higher highs and higher lows, it is simply an uptrend market. Conversely, if it's making series of lower highs and lower lows, it's obviously a downtrend market. According to statistics, trends are estimated to occur 30% of the time. So while they are in motion, you got to know how to take advantage of them. This is also good. To determine whether the market is trending or not, you have to use bigger time frames such as the 4 hour, the daily, or the weekly time frame. Never try to use the smaller time frames to determine the market structure. Okay. All right. So if it's doing higher highs, higher lows, it's an uptrend market. Series of lower highs and lower lows. It's a downtrend market. All right. So let's go on our charts and let's try to identify. So they said the best time frames to look at market structure is what? 4 hour, the daily, or the weekly time frame. The higher high and higher low. Okay. This was a higher high. All right, so this is a higher high because it's higher than this previous high over here. All right. So it's above this high, so that's why that's a higher high. This is a lower low. I mean a lower high. No, you're not getting a sticker. All right, so this is a lower low because it's lower than this previous low right here. Okay. Then we got a lower high because it's lower than this high. And then she's right now. You know what she's doing. All right, 4 hour time frame. See the higher highs over here. So this is an uptrend. I like this. This is currently an uptrend. All right, you catch my drift. That's on the daily time frame, guys. But on the daily time frame, that's that lower high, right? Letting you know when you're in the silver territory. I can't wait till we go all the way into depth of this. Control, confuse you guys on how to put it together. All right, that's a higher high on a 4 hour time frame, a higher high on a 4 time frame. Okay. All right, so let's talk about it right quick. This is a higher high because it's higher than the previous high right here, higher low. It's higher than this low, higher than this high. It's supposed to be higher low. So it's higher than this low. I want to do all of this until right here. It's still higher than that low. Higher than this high, higher than that low, higher than this high. That's just another consolidation of really consolidation. We'll get into it. So we identified some higher highs on the daily time frame. It looks like it looks crazy right here. I want us to get it down. Beautiful downtrend. It started. Okay, so sorry about that, guys. I already got a couple of some higher highs and higher lows daily time frame. And this is higher than that previous high. That's over here, guys. Oh my gosh. All right, so at one previous time that was a higher high, all right, higher low, higher high. Okay, but now we're looking at a downtrend. Higher high still, previous than that, higher than that previous high, higher low because it's higher than this low, right? But then this becomes a lower high. It's lower than this high, lower low, because now it's lower than this low, lower high from this previous high. We can say lower low, lower high, lower low, and then she just kept going until the uptrend kind of started. It's like downtrend, uptrend, but like consolidate, still have some type of bullish, bearish, lower high, lower low, lower high is formed. We could have wrote her out if she turns around. That was a little too deep for y'all, but all right, so how to trade trending markets. If you can identify a trending market, it will be easy for you to trade it. If it is bullish, you will look for a buying opportunity because if you have to trade the trend, and if the market is bearish, you have to look for a selling opportunity. But the question is, what is the right time to enter a trending market? Trending markets are characterized by two important moves. The first move is called the impulsive move, And the second one is called the retracement move. See the example below to understand what I'm talking about. Impulsive retracement, impulsive retracement, impulsive retracement. All right, as you can see, the market is making higher highs and higher lows, what indicates a bullish market. If you see this market, you would think of buying. But as you can see, the market is making two different moves. The first move is an impulsive move, and the second one is a pullback or retracement move, the corrective move. Professional traders understand how trending markets move. They are always buying at the beginning of the impulsive move and take profits at the end of it. All right, so they're buying here and then they take their profits at the end of the move. All right, this is the reason why the market makes an impulsive move in the direction of the trend and retraces before it makes another impulsive move. If you are aware of how trending markets move, you will know that the best place to buy is at the beginning of an impulsive move. The traders who buy an uptrend at the beginning of the retracement move, they got caught by professional traders, and then they don't understand why the market hits their stop loss before moving in the predicted direction. See another example of a bearish trend. Impulsive retracement, impulsive retracement, impulsive retracement, impulsive move. All right, the illustration above shows a downtrend market. As you can see, the best trading decision is to sell the market at the beginning of an impulsive move. If you try to sell the retracement move, you will be trapped by the professional traders and you will lose your trade. And now we know how to identify downtrends and uptrends and how to differentiate between an impulsive move and a retracement move. This is very important for you as a price action trader to know. But the most important question is how to identify the beginning of the impulsive move to enter the market in the right time with professional traders and avoid being trapped by the retracement move. To predict the beginning of the impulsive move in a trending market, you have to master drawing support and resistance levels. So what are support and resistance levels and how to trade them on our charts? This is what we see in the next chapter. Ooh, can't wait for that. All right, so let's look to see if we can get those impulsive moves and the retracement moves identified in the charts. And then I'm going to let you guys go. All right. want to get somebody to put right there. Thank you. Let's put the feet down there. Arrows, I want to point it. All right. We got close up tracements. I think we found that uptrend on 4 hour. When I teach, I don't really like. I know we're gonna be working off of they consolidated up on this. I really don't like this. All right, retracement, impulsive moves. And down there you have it. An uptrend. We've identified the impulsive and retracement moves. I'm like, what we had a downtrend. And then this is the downtrend, impulsive and retracement moves. So do that chart work, guys. Do your homework. This is to go over your market structure. If you are this far along in the process, tell me how is it going? Do you have any questions? Leave comments below in the section. I'm gonna let you guys go. And look, this would be the impulsive move on EU overall on a daily time frame. This is the retracement, and then this was the start of the impulsive move. All right, so that's all that I have for you all. Make sure that you are following me at Meredith Goddess 22 on all of the social media platforms. MARTHEGODESS. Two number twos. If I know it's only one D, that's how I want it to be. Make sure you like, subscribe, share. Leave some information below, comments, questions, anything. I am out.